Texas Sales Tax Nexus. 2 tests, and only one of them has a threshold. Nexus is not about how much tax you owe. It is about whether Texas can require your business to act as a collection agent for the state. There are 2 independent paths, and they do not protect each other. Economic Nexus begins at $500,000 of total Texas revenue in the preceding 12 calendar months. Physical presence creates Nexus at any revenue level at all. $1 is enough. Here is what most sellers get wrong about the $500,000 figure. It is gross revenue, not taxable revenue. Sales for resale count. Sales to exempt entities count. Separately stated handling, transportation, and installation charges count. So a wholesaler with almost no taxable sales into Texas can cross the threshold anyway. Texas also has no transaction count test. Volume alone never creates Nexus. Only the dollar figure does. Now the physical presence side. A remote employee. Inventory stored in a Texas fulfillment center. A subcontractor working in the state. Recurring trade show attendance. Any one of those removes the safe harbor entirely, and the obligation can begin immediately. There is a second consequence sellers rarely anticipate. Registering for a Texas sales tax permit also puts the business on the comptroller radar for franchise tax. The franchise tax is a separate obligation with its own reports and its own deadlines, and it follows the registration. If you have already crossed the threshold and never registered, the exposure is the tax you should have collected, plus penalty and interest, running from the date the obligation began rather than the date you discovered it. That date is fixed by rule. It does not move because nobody noticed. Early analysis is cheap here. Late discovery is not. Tax Expert Today, Naples, Florida. The full written guide, with the tables and the primary sources, is linked below.